The stock market is in a position right now where it's set to fake a lot of people out. In this video, I'm going to go over what's happening with the market right now and the opportunity that will result from the current situation going forward. So looking at the S&P 500 over the past year, obviously there's been a lot of selling pressure all across the board, and we've been stuck in this giant you could say channel to the downside all year long. The S&P 500 keeps rejecting off resistance time and time again. At the same time, it keeps bouncing off support time and time again, and it's just stuck in this channel. Recently, there hasn't been any crazy news to the point where we are set to see a giant run up or a giant run down. The market's just been bouncing back and forth, and it looks like it's rejecting pretty hard off of resistance right now. But it's not the full story because there's other things going on behind the scenes that we also have to talk about. So this is basically the channel for the whole year, but if we go even deeper, there has also been like a shorter term channel to the upside that the market has also been bouncing in between. So while like if we hide the most recent channel, we can see that it looks like the stock market's about to come back down and retest that bottom support level, but that might not necessarily be the case because we are still in between two other key support levels that have been, or two other key levels that have been holding pretty strong over the past couple weeks. So that's important to know, but at the same time, if we look back through every single pop and drop throughout the stock market all year long, you'll notice something interesting is happening. So if we add each pop from the year, the first major like bounce back up this year was in March, right? And from the low to the high, it was around a 12.5% pop, and that went all the way from the bottom section of support all the way to the top section of resistance, and it was like a full move. It was a strong run up too. But over time, that sell-off became steeper and steeper, and the stock market ended up making a brand new low, right? But then again, we had another small pop back up, right off support again, and this was around a 10% pop back towards the end of May. This one never ended up touching the top line resistance, but again, it made a brand new low shortly afterwards. And then we had like the giant explosion at like the end of June and then like basically all of July and like even some into August. And this was like a 19.2% pop from the low point to the high point. It went from below support all the way to that higher resistance level, which was awesome. But like I said a couple other times, it made a brand new low shortly afterwards. Now we're to the point where it's like we just had an 18% pop, rejected off resistance again, and it's definitely heading towards support right now, but at the same time, we are making at least higher lows in the short term from, you could say, October, which is good for the market. But I really don't see a giant retest of support or a strong breakout to the upside unless we have an event that makes the market move. If we look like over like on an hourly chart, the market just been back and forth, and whether it's inflation data or Powell speaking or jobless claims or whatever the case may be, earnings, it hasn't been enough to truly move the market. And what's interesting is if we look at a heat map, as we all know, stocks are not created equally. Apple and Tesla and Amazon has a much larger influence on the market overall compared to like, you know, MasterCard and Goldman Sachs, you know what I mean, and McDonald's. So what's interesting is the stocks that have, you know, some of the heaviest weighting in the market, like Apple, like Amazon, like Tesla, have actually been some of the stocks that have been falling off the most recently, and that is a big concern of mine because it's like, you know, when you have Tesla not only making brand new lows of the entire year, but you also have Elon Musk dumping billions of dollars worth of Tesla shares, and you have Tesla selling off where, like in times where even like other stocks are trying to pop up a little bit. That's a tough sign because if these market moving, you know, companies like Apple, Amazon, Tesla, Microsoft, Google, and others, if those are falling down, it makes it so much harder for other stocks to move up, let alone the entire market. Because, you know, when these stocks are selling off, it has a direct negative impact on the market overall. So, if we are going to see any chance of a breakout, these big market moving tech stocks need to hold up, or else it's just not going to be a real breakout. At the same time, though, what's also interesting is if we look back towards the heat map, like even especially over like the past month or past 3 months, some stocks that are like non-tech stocks have been holding up in a pretty good way, especially if we look at like some of these semiconductors like Nvidia, AMD, and others. Like they've been holding up pretty strong, and especially anything to do with like healthcare, like Johnson & Johnson, Pfizer, AbbVie, like those stocks, while they don't have as much of an influence on the market overall as like Microsoft, Apple, Tesla, and Amazon, when you have like the whole healthcare industry moving up in a strong way, that is a good sign, and that definitely does add some strong buying pressure into the market. But it's like when you have like tech selling off and you have like other areas of the market holding up, it just creates like a giant like standoff. You know what I mean? Like there's just like you get no movement. You know what I mean? It's just like no movement, and that's the thing that's going on in the market right now. So going forward, we need some sort of catalyst. For the rest of December, there aren't really too many other major market moving events that are scheduled, but keep in mind sometimes these unscheduled or black swan events end up moving the market the most. So that's also interesting and something to definitely keep in mind. Now, what's also good though is if we look at like the treasury bonds, treasury yields, we can see that yields have been pretty flat and they have been falling lately, which is a great sign. That definitely does help the market, because when yields rise at the pace that they have been all year, not only does that shock stock market valuations, but it also increases things like mortgage rates and auto loans and all that good stuff. So it is good to see like, some signs of like easing selling pressure, but at the same time, there's so many mixed signals, like more than anything else, where it's like there's not enough to like fully see a breakout, and at the same time there's definitely not enough to fully see a breakdown either. And like even just a lot of like economic indicators have been showing mixed signals as well. Like we just talked about the treasury yields, but even the unemployment, that's still very low. Typically we do see this rise when we do have recessions, and this does tend to lag a little bit, and I wouldn't be surprised if it does uptick going forward, but it is still very, very low at 3.7%. So that is interesting, and it's definitely something to keep in mind. Another important thing to keep in mind is like the stock market, and especially individual stocks are constantly moving in like cycles, and like the stock market's very cyclical, right? Very cyclical. And if we look at some of the best and worst performing stocks of the entire year, some of these stocks are getting to the point of like euphoria and thrill, or maybe even complacency, while at the same time we have other stocks getting to that panic or anger or depression phase. And what's important is like if we look at a heat map, you might see companies like ExxonMobil and Chevron and other stocks like that up 70% or even more. It's important to be careful not to be buying some of these stocks that are already up 70%. And if you are, at least have a tight stop loss or even buy some protection. And at the same time, you could also say the same thing for stocks that have been falling the most. Like, let's say the market were to rise up a ton. Some of these stocks that are down the most, it's a lot easier for those stocks to pop up rather than stocks that are already soaring this year, if that makes sense. So for example, let's say we look at a company like, Meta, that's down 65%, right? It will be a lot easier for Meta to rise going forward than it will be for ExxonMobil, assuming that it's just like a normal market uptrend. If there's obviously some crazy oil news or something like that, then that would definitely change the whole situation. But the main point is, and what I'm trying to say is, some of these stocks that are down the most, it will be a lot easier for them to pop up, considering that they are oversold. And as long as you're trading a quality company that, is a strong company and they're not going out of business and they actually have real growth potential in the future, those stocks are something you should be eyeing up. You don't necessarily have to buy them, but you definitely should keep an eye on them, even for short-term trades. So definitely keep that in mind as well. So that's very important. But overall, the market's just been like a tricky situation right now, where it's like, there's no clear direction. So going forward, I think the keys will be to obviously watch the market breadth. When you have tech stocks going down and you have like healthcare stocks and other stocks going up, that's when like the bad movement comes into place, because there's just like mixed signals happening to the SPY or the S&P 500 overall. So if we end up seeing like healthcare stocks and tech stocks and financial stocks and all these other stocks start to tank down together, yeah, there's opportunity all day long in that situation. And you can see the same exact thing to the upside. It would be completely different if we were at resistance right now like we are, and then we're seeing healthcare stocks run up, bank stocks run up, and tech stocks run up like Tesla, Apple, Amazon, and all the others. Then it'd be opportunity all day for a breakout, but that's just not the situation. So going forward, keep an eye on just the market breadth overall, and when we see like multiple sectors or industries trending in the same direction, that's when there's opportunity. At the same time, if you do have stocks that are moving independently, you can also trade those without having to, I guess you could say, like wait for the overall market's permission. An example of that would be with Moderna. So basically the stock market lately has been up and down, but Moderna has been running up just independently, and that's because they had good news. So it's like, if you have a company that's, blasting up with good momentum, good volume, they have a catalyst, you can trade that, and there's a lot of opportunity in those situations because it's moving independently from the overall market. So it's like, if you don't want to sit around and wait for all the industries or most of the industries to group up and move together, just look for stocks that have big news and that are blasting up, regardless of what the overall market's doing. So that's pretty important to keep in mind as well. And Moderna is a great example to the upside lately. And of course, they had that huge news with their vaccine and their cancer situation. So that's awesome. We covered that in yesterday's video. But anyways, Moderna is a good example to the upside. But even when you have like certain stocks like Tesla, I know Elon Musk has had a bunch of... I know he's been getting attacked quite a bit lately, but at the same time, Tesla stock has been selling off quicker than many other stocks in the entire market. And like it was almost like every single time Tesla tried to run up, there were just rejection after rejection after rejection. So it's like when you have situations like that, when there's just like one stock that's just like so much weaker than everything else, you can just ride that stock and the momentum that it currently has. So keep that in mind. And it actually turned out that Elon Musk was one of the some of the selling pressure there. He was selling billions of dollars worth of his own shares. So keep that in mind as well. But really going forward, keep a close eye on SPY right now. It's a tough situation. We're still between multiple major resistance and support marks, so it should be an exciting end to the year. On a positive note, December does tend to be a pretty good month for stocks, but at the same time, in order to see a true rally, we'll need these industries to group up, and we'll need to see a break above resistance. So it'll be an exciting end to the year either way. If you guys like the video, make sure to subscribe. I post all the time, and when you subscribe, you'll see my videos recommended to you more often. Also, make sure to join the Stocked Up Discord chat. It's going to be that first link in the description and the comments down below. It is completely free, and when you join, you'll get access to free day trades every single morning. You can chat with Tom and myself all day long and network with a bunch of other great people and traders. Thank you guys so much for watching, and have a great day.